So, my friends, my bros, sisters, what happened exactly, nearly exactly like I said in the update of today before the market, and now we are after the market already opened. The news, the PPI are good for Nasdaq. Typically, it doesn't moving. What's happening here? Well, there are two explanations in technical analysis. Last not least, after the news in Nasdaq chat and also in Bitcoin, I mentioned that the Nasdaq is going, or after the market at around, I think 10 o'clock New York time, Fed members were talking. In these days, you should be very aware because you never know how they are reacting. They are, for example, saying we are not looking for raising of interest rates, and many algos are programmed to immediately catch some special words what those members are talking. If they mean we don't raise the interest rates, the algo just catches interest rates rising and they push up the prices as we have seen here, but they don't understand, of course, the whole concept and context of what that person is saying. And the Fed member who was talking after the news said, yes, there are rooms for interest rate cuts, but, and that was the reason that the market went up very, very suddenly. But he said in the second sentence, there is no need to us. We knew that inflation will come back. It means there is no need to cut the interest rates. And of course, inflation is coming back all the time. You can slow it down. It's coming back. You can hike the interest rates if the economy is heating up, for example. It's going back, but it's coming back again, right? So every year have inflation rates from the beginning of economy, or they have been finding the first money in the world or whatever. Since they have been trades on this planet, the inflation has been there. All right, now I go first of all here through the Nasdaq, and that's very important for you now to know. And I will compare it to S+P 500 and then to Bitcoin, and the relation between all these three and what can happen. Number one, we have seen at the moment I did the last video, that was something around here or here, I think. And then I told you that we will have 75% probability ranging and 15% chance that the market coming down and 15% that the market breaks up. It did happen. Now the odds for the bulls are over. Why? Because they didn't catch their chances. And if you look at it now, this area, what was it? That was the very fast low of yesterday after the CPI, the so-called CPI low, right? Why CPI low? Because yesterday the CPI data have been released, right? And where was the CPI high? Something around here at around 18,150. And the bulls pushed up the price, and they had in minimum to feel the 18,150, the CPI high of yesterday, right? but they missed it, they didn't. So the value has been created here, was shrinking down. How did I see that? Well, let's say we are in a trend, so I clean here the page again, we make it new. So let's say we have an uptrend, right? It doesn't matter. You have an uptrend. It can be on a daily time frame, weekly, hourly. You can take, for example, a bullish 4-hour candle, and then if you go to lower time frame on 1 minute or 30-second time frame, it doesn't matter. At any time frame we have trends, right? Some trends are down. For example, you are trading on hourly time frame, you have a buying position, but instead that the price goes for you, you can watch it or look it at your account balance, and you see, oh, okay, the position is red. It has to be blue or green or what color ever you have at your brokerage account. And then you want to know what's happening. You go then to the low time frame, for example 5 minutes or 1 minute, and you see, okay, the market should go higher, but now if we go to the lower time frame, we see, oh, you have a trend down here, right? Okay, exact thing can happen here. We are bearish, we have a sell position, but we see our position is red. What can we do? We go to the lower time frame, and we see, the price on lower time frame is increasing. All right, this is the first part. So we have a trend, and at this moment we see here the trend was up, then on lower time frame it came down, then again higher, and then down, and so on. And now the current price, which is here, if we see where the trend has begun, the trend of today or the trend after the market open, after the news, right? We have different opens. First of all, we have an pre-market open before 9 o'clock. Then at around 9:30, the first traders take their trades. That's the market open. And then we have news open. In this case, the news open was here, which was extremely bullish, and the market generally intended to get higher, but the buyers didn't find any sellers, right? The sellers, for example, said, all right, we take that price, we sell it, we give you the price, and you can go away. But the sellers told them, no, the price is expensive. The price of Nasdaq too expensive for us. We don't want it. So we want cheaper. And of course, that's not a good situation for the bulls. Now, as we have no insight in the activity of the pit traders and the big boys, we have another possibility, and that possibility is called delta, right? Delta. So Greek alphabet, delta. But this delta is a mathematical measure and formula. And what does this delta tells us? If we are, let's say, in a range, right, like this, and our trading plan says if the market breaks up these levels, meaning going higher, take a buy position. The market breaks up like it did here, right? We had a consolidation, and then the market broke up, right? Skyrocketed, but to a certain level. And now the delta should follow and should say, yeah, I confirm it. And the delta doesn't tell you if the market is here or here or here. The delta tells you when the market is here or nearly to break it shortly before this explosion comes. And during all this time, the delta was bearish, was down. It told me it might be 15% chance, 15%. Why 15%? Remember again, because 70% of time, sometimes more, the markets are ranging in consolidation. They go sideways, right? Ranging. So they go that way. They break up, come back, and so on. You may hear also other expressions like bracketing, bracket, right? And the delta tells you somewhere, all right, now I'm bullish. We have a big chance that the market goes up, and if goes up, take that bullish trade because it will go higher. The same the delta says if the market comes down, right? So delta is a very, very important and good friend for us traders. And what's happening? The delta was bearish all the time. And now look here. Currently, Nasdaq going higher again. Some scalping, big boys buying here the market, possibly here, and then taking profit as it does. So I make it bigger, then you can see this bar currently at the price of 18,059. And the market had to break this range immediately and to get higher. Maybe that way, it doesn't matter. Maybe that way, it didn't matter. Maybe that way, it had to go higher prices, right? And now it broke its own bullish range. Why bullish range? Because we had here previous ranges in the past, and this range is higher than these ranges. Why? Because you had a bullish breakout, right? Therefore, bullish range. And now what happened? The price came down, and interestingly, in this case, the bell delta is bearish. So, delta was bearish here. All the time the price went up, and it didn't change, coming back. And interestingly now, some traders don't agree with this price because the price, as you see, is going back into its range. It's a sign that the sellers are taking control now, but the buyers are fighting, and all the time the bell delta is bearish. So the possibility that we will have here is, number one, the bulls must fight very hard to get higher, and the delta should be green, or the delta should be bullish, should change its mathematical measure. Possibility number two, delta stays bearish. We can say if the market is going higher, even breakout, sooner or later it will come back to its range and then go down. Okay? Why? Until this limit at around 17,900, because it has to fill the CPI low of yesterday. Typically, the market on such data, on CPI data for example, they break higher, they come back on the same day, fill it, and then if they expect the other day bullish sentiment, they go higher, right? Make the new higher highs. but it didn't happen. So in this case, the market is looking now for this range to get down below 18,000. If breaking that, we go then to the 17,970 with high probability, with around 15% of chance. Why? If it falls down here, we might have again 70% probability a ranging time before the market breaks it down, right? Each time that happens, you calculate with probability. Okay, we have just 15% chance to get up, 15% chance to get up here. If the market gets up in the previous range, previous bullish range, yeah, then we have how much probability that we stay here and not get higher? 70% again. And then this situation makes it now difficult for Nasdaq. The longer Nasdaq stays in this range and then changes back in this range, the higher is the possibility and probability that we break down. Why? Because now we will have the market begins then here, but sold off here, bought here, sold up here, and now we have a fusion of two ranges to one range, a new range, and guess how much possibility and probability do we have? 70%, right? But on the same time, delta is all the time bearish. We have 15% chance that the market gets down. And if the market gets down, the market structure will be changed, right? We came somewhere from here. So at the moment, this is the formation on higher time frames. And if the market is coming down, it is enough one tick below this CPI low, the market, it may also go down or go higher, right? But the market structure will be disturbed, and that leads to 70% probability that we will have again a range, but this much down, right? The ranges in a bearish trend are moving up, sometimes up and then down, down, and so on. And then we have 15% chance that the market breaks down. So the probability that Nasdaq will go deeper is increasing that way, right? This is the first one, delta. Then the second one, look here around. Typically, if the market breaks out, we get higher, and Nasdaq is, for example, green. On the same time, the Russell, Dow Jones Industrial 30 and S&P, they are green too on the same time. What do we have here? We have now green percentage number for Nasdaq above open, and Russell is red. S&P is red. What does that mean? Why it does matter? Because the big guys, they buy and sell the stocks then across the time on such powerful days, but they are not doing it today. That's a measure. We will have now 70% probability that the market is ranging again that way, but with an oath that is coming down. Okay, why? Again, because the CPI low is not filled. So the third sign is the US dollar. Look at the US dollar. If Nasdaq goes up, S&P indices go up, typically in such days, and the data today have not been so dollar friendly. Yesterday's data have been much more better. And if we look at the dollar is green, also in a bullish ranging at this moment. And each time the dollar index goes up, on the same time euro against dollar must be green. All right, so if you want to be sure you won't risk a bull trade that is risky for you and you don't get trapped, number one, you look at other indices. For Nasdaq, if you trade with Nasdaq, you look at S&P and Russell, mainly Russell. Russell moves typically faster. If all of them are green, condition number one is filled. Condition number two, dollar must be red. If dollar is red, all three indices green, conditions number two is met. Condition number three, euro against dollar must be green. Euro against dollar must be green. Does it here? Of course not. Euro dollar is red and dollar is green, so vice versa. And two of our three indices are red. So what does it tell us? Now, if Nasdaq is breaking below this range at around 18,000 something and fills the CPI low of yesterday, on the same time Nasdaq becomes red, Russell and S&P are red, dollar stays green, and euro is green, you can bet the market will go down deeper. The market is not willing anymore to stay higher, even if we have today bullish data for Nasdaq. As simple as it is, as simple as it is, as simple, you can't believe it, but this is how trading works if you trade Nasdaq. Why? Because we have a word that's called divergence. In this case, we have intermarket divergence, meaning the indices are diverging against each other. Nasdaq is up, but S&P and Russell that should follow them are red. But on the other side, one condition has met. Dollar is green, euro is down, red, okay? And now we come to the technical analysis. The move is bullish, okay? So what to do now at this moment? Well, a possibility is that we don't do nothing. We just wait. Why? If you are not risking anything, you are not winning anything, but you have not lost. Better you wait. You just wait for this sign to see what Nasdaq is doing. The reason that Nasdaq is going up here, because we have a lot of gamblers, but we have also a lot of buyback companies. Look at the fundamental data. The fundamental data is saying that the future in this year for the tech company, for the big companies, is not looking too good. Joe Biden told yesterday, I think, or 2 days ago, to the companies, look, we are not going to cut the rates, maybe one rate cut, maybe, but of course we know the probability is below 10%, and it's becoming every day less and less. And he told to the companies, you are complaining, all right? Then instead of selling your products to the people for higher prices, for expensive prices, sink your prices. But the companies don't want to do it. Why? Capitalism. If the companies suddenly say, okay, good, now, for example, we sell our Apple mobile phone for, let's say, 10, 20, 30% cheaper, what happens to the stock? The revenue, the earnings for the next time go back, meaning more people sell, or the trust in Apple stock is going down. It's happening also to other companies. So this possibility won't help them. So on the other side, the number of smart people, traders, retail traders is increasing, and that's fantastic. And instead of buying those stocks, they trade down those stocks. At some point, the Wall Street and also the companies start to buy back their own stocks. And someone who is not informed well thinks, oh, I buy this stock now, and he risks his money in a hype. Okay? This type of buying is called buyback or insider buying. It's legal as long as they inform the SEC and report it. Some doing it also, but not reporting, and that's illegal. All right. We see now, for example, Nasdaq going higher again, right? And some say, yeah, it's going higher. But now, with that knowledge on behind, we see in the meantime now RTY is green, but S&P is red. Most importantly, the dollar index, dollar DXY, is green. The dollar index must be red. So you can bet we maybe go a little bit higher, but we fall down again. All right? So with knowing this, you know now how to trade, to take your trades today. As easy as it is. We wait until the market will come down. Some will say, okay, I will take a risk because it will go down now. As a trader, you should be very skeptical and never take something for granted. Okay? We can have all the conditions here met, but if the delta stays all the time bearish, it can happen that Dow Jones, S&P, and so on, everything is green, dollar red, euro green, but you see here, it doesn't move well. What's the reason? Delta. And delta tells us exactly it's a fake trend. The market runs higher, say, okay, breakup, we go higher now, and then it falls back. It's going higher, it falls deeper. Okay, keep an eye on delta. The same we can say about Bitcoin. If you are trading Bitcoin, and we see now, after a very period of bullish delta during the last 48 hours. Now, here was the news released, right? But look here, the delta gave us enough information, right? If we take a line at this here, where the news released, But here the delta gave us information. Oh, I'm bearish. Don't take that possible bullish trade. The market went up. What happened? It came now deeper. It's going the same like Nasdaq to fill the low, the CPI low of yesterday. Now, some people say the US data have no impact on Bitcoin. Guess what? They have very big impact on Bitcoin. Why? Because some countries use Bitcoin to trade with each other, especially those countries that are under the international sanctions. I don't name those countries, but you can think about which countries we are talking about. They have sanctions, the US sanctions, and they must negotiate, sell their oils, whatever. And some have big government Bitcoin factories. And I heard yesterday that 2 big Bitcoin farms of one country was attacked by another country. We don't name those because we are no political channel here. And those are who are making those troubles now in the Middle East, right? You know about whom I'm talking to. And that's the reason now that, first of all, those Bitcoins and also some Bitcoin accounts have been hacked. The news will be released maybe in about 1 month. How do I know that? So I cannot also tell you, yes, at this moment my sources, but these sources are no private person. These sources are the websites that I am connected to, and I am just getting the reports. Then I am no member of them. But if we don't use those sources, the economy, what is happening, have of course a very big impact also on Bitcoin and crypto, because a lot of people change their dollars into Bitcoins to own Bitcoin. And now it's becoming much more, with the current fundamental global situation, economic situation worldwide, it's becoming much more complicated to them, right? So in this case, Bitcoin has today a very good chance to break up, to go to the direction of 72K. And the Delta says, it's a nice idea, but sorry guys, I am red all the time, I'm bearish. Right? That's just simple like it is, right? So try, if you don't have any Bitcoin, then you can look at the market structure, for example, by measuring the highs and yesterdays, to watch closely how the market is reacting. If the market touches the high, is the market then coming slowly back but moving faster, quicker, stronger to that resistance level? Or the moves are very, very slowly, and the same if the market is near of resistance. And that way, you can estimate that the market, the probability of the market to get higher or to go below the support line is increasing, yes or no. We see, for example, here again, 70% probability, right? The market tried every time to get up, to get up, to get up, to get up. And every time it fails, it's losing that part of its 15% probability. Now guess what? What probability is increasing? The 70% probability of ranging is all the time present. But we can say every time the market fails, the probability of that 15% bearish trend is increasing, and exactly that happened here. The market came down again. Then the market consolidated, made a move, wasn't able to break this range, right? You see here the market came up and then went back and again broke the range down again. Now the market is coming down here, but instead of going higher, what's happening? 70% probability. How much is your probability that the market comes down? 15%. How much to get higher? Also 15%, but the market trial is very, very weak, right? Okay, I hope you had a good time today. Thank you very much for your support. If you like the channel and the update, please subscribe, hit the notification bell, and if you like, you can share also these videos with other traders in the community. My pleasure. Have a great day. Have a very good trading day and take your trades with wisdom, and think always risk management and money management matters, and the performance of the past is no guarantee for futures performance. Keep in mind and have a great day.